Strive Inc. is trading at exactly 0.86 USD as of this moment, which reflects an intraday increase of 0.057 or 7.03% today. While most of the market is looking at this as just another penny stock rally on the NASDAQ, there is a much more aggressive engine running under the hood that almost nobody is talking about yet. Most investors see a sub-$1 stock and assume it is a struggling tech firm or a fading software play, but the reality is that Strive has effectively turned itself into one of the most leveraged Bitcoin Treasury vehicles on the public markets. They are not just holding the asset, they are using a unique structure of perpetual preferred equity to amplify their exposure in a way that makes MicroStrategy look conservative by comparison. This is the part where the typical expectation of a small cap recovery meets the reality of a high-stakes financial experiment. When you look at the ticker ASST, the general belief is that you are looking at the remains of Asset Entities Inc., a company that used to focus on social media community management. The expectation was that after the reverse merger with Strive Asset Management, this would become a standard boutique investment house. Instead, the management team, led by Matthew Cole, has pivoted into a strategy they call Bitcoin amplification. They recently announced an increase in the dividend rate for their Series A perpetual preferred stock, known by the ticker SATA, taking it up to 12.25%. This is a massive signal because it shows they are willing to pay a high cost of capital to maintain their aggressive accumulation of digital assets. While the average retail trader is waiting for a software update or a new client win, the real story is the 752.5 Bitcoin currently sitting on their balance sheet. If you have been watching the tape today, you have seen the volume picking up alongside that 7% move. This is not just random retail noise. We have seen significant insider activity recently, including a major purchase by CEO Matthew Cole, who picked up over $200,000 worth of shares at these levels. When a CEO puts that kind of personal capital into a stock that has fallen from a 52-week high of over $13 down to under $1, you have to stop and ask what they know that the broader market is missing. The expectation is that the company is diluting shareholders to survive, but the reality is that they are building a massive chest of assets while the stock price is depressed. They are essentially betting the entire farm on the idea that the gap between their market cap and the value of their Bitcoin holdings will eventually have to close. The volatility we are seeing today is partly a reaction to the sheer complexity of their recent deals. Strive has entered into an agreement to acquire Semler Scientific in an all-stock transaction. This move surprised a lot of people because Semler was already famous for its own Bitcoin treasury strategy. By folding Semler into Strive, they are creating a concentrated powerhouse of Bitcoin-focused corporate entities. The market is currently struggling to price this because it is so outside the norm of traditional asset management. You usually see firms like Fidelity or Schwab keeping things very middle of the road with their online investing tools and mutual funds. Strive is doing the exact opposite. They are moving away from the safety of the herd and positioning themselves as a high beta play on the future of corporate finance. Comment below how many shares of Strive Inc. you currently hold, or if you are waiting for it to clear the $1 mark before jumping in. To understand why 0.86 USD is such a critical level, you have to look at the institutional activity that has been quietly building. We have seen names like Yorkville Advisors and Anson Funds taking positions. This is not the type of crowd that buys into a company that they think is headed for zero. They are looking at the liquidity and the fact that Strive has managed to raise hundreds of millions of dollars through PIPE financing and warrant exercises. The common narrative is that these small caps are always one step away from a delisting notice, and while Strive has had its share of NASDAQ compliance hurdles, the recent capital raises have given them a massive runway. They reported over $100 million in cash recently, which is an incredible amount of liquidity for a company with a market cap around $700 million. The disconnect here is fascinating. On one hand, you have the legacy business of Strive Asset Management, which provides exchange-traded funds and wealth management services. This is the part of the business that looks like a traditional firm, competing with the likes of Robinhood or Interactive Brokers for a slice of the self-investing market. On the other hand, you have this aggressive Treasury strategy that is more reminiscent of a hedge fund. This creates a tension between what investors expect from an asset manager and what they are actually getting. If you are using a Fidelity trading platform or a SoFi active investing account to buy this, you are not just buying a fee-based business, you are buying a leveraged bet on a digital commodity. The history of this company is a bit of a whirlwind. It started as asset entities, which went public with much fanfare before the stock price cratered. The pivot happened when Strive Asset Management, co-founded by Vivek Ramaswamy, saw an opportunity to use the public shell to build something different. They wanted to create a firm that focused on shareholder excellence rather than political agendas, but that mission has quickly evolved into becoming a leading Bitcoin treasury. This transition from a social media management software company to a top-tier digital asset holder is one of the most drastic pivots in recent market history. It is why the stock has such a wide 52-week range. It's essentially a different company today than it was 6 months ago. Looking at the technical side, the 0.86 USD price point is sitting just below some heavy resistance. If the stock can sustain this 7% move and break back above the $1 psychological barrier, it could trigger a massive short squeeze. The short interest on ASST has been elevated because many traders are betting that the Bitcoin amplification model will fail if the underlying asset sees a major correction. However, the reality is that the company has structured its debt through perpetual preferred equity, which means they don't have the same immediate repayment pressures that a traditional borrower would face. This gives them the ability to sit on their hands and wait for the market to move in their favor. For those of you using online investing apps like SoFi or Robinhood, the fractional shares feature has made it easy for retail to pile into these sub-dollar stocks. This has created a lot of noise in the daily price action. You see these quick spikes followed by immediate sell-offs as day traders scalp for a few pennies. But the real moves are being driven by the institutional side. When you see a billion-dollar fund like MMCAP International taking a stake, they are not looking for a quick 5% trade. They are looking at the intrinsic value of the Bitcoin treasury versus the current market valuation of the stock. Right now, there is a significant discount there, and that's where the opportunity for a massive re-rating lies. The corporate strategy here is also worth a closer look. They are mirroring a model that Vivek Ramaswamy used in the biotech sector with Rovant Sciences. The idea is to have a lean parent company that manages various operating subsidiaries, each with a specific mandate. With the acquisition of Semler Scientific, they are expanding into preventative healthcare, but they are doing it in a way that allows them to monetize those businesses to fuel more Bitcoin purchases. It's a flywheel effect that most investors have not fully grasped yet. They expect a simple asset manager, but they are getting a diversified holding company with a heavy crypto tilt. If you are currently managing your own portfolio through a brokerage account at Fidelity or using a Schwab Intelligent Portfolio, you know that diversification is usually the name of the game. Strive is the exact opposite of that. They are providing extreme concentration. This is why the stock is so polarizing. You either believe in the long-term value of their treasury and their ability to pick up distressed assets like Semler, or you think the whole thing is too risky for a public company. There is no middle ground here. The reality of their balance sheet is that they are one of the largest holders of Bitcoin in the world, and every time the price of Bitcoin moves, the net asset value of Strive shifts dramatically. We also have to consider the macroeconomic environment. As we move into 2026, the discussion around corporate treasuries and digital assets is only going to get louder. If more companies start to follow the lead of MicroStrategy and Strive, the demand for these types of stocks will skyrocket. Currently, Strive is still flying under the radar because of its small cap status and its recent merger history. But as the market matures and more people look for ways to get exposure to Bitcoin without buying the coin directly, tickers like ASST will become the primary targets. This is the expectation versus reality dynamic at play. People expect a penny stock, but the reality is a multi-billion-dollar asset play in the making. The dividend on the SATA preferred stock is another piece of the puzzle that often gets overlooked. By offering a 12.25% yield, they are attracting a specific type of investor who wants income while still having exposure to the upside of the Bitcoin strategy. This creates a stable base of capital that the company can use to continue its growth. It's a sophisticated piece of financial engineering that you don't usually see in the small cap space. It shows a level of sophistication that contradicts the simple penny stock narrative. Management is playing a much longer game than the daily chart suggests. As we look toward the final days of the year, the momentum seems to be shifting in favor of the bulls. The 7% gain today is a strong signal that the bottom might be in. We have seen the stock bounce off its lows several times now, and with the insider buying from the CEO, the confidence is clearly there at the top. The common ground among investors is a fear of dilution, but the reality is that the capital being raised is being put into an appreciating asset. If the value of that asset grows faster than the share count, the shareholders will win in the long run. In summary, Strive Inc. is currently sitting at a fascinating crossroads. The live price of $0.86 USD reflects a company that is being heavily discounted by a market that does not